Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host, Shafiq Morton. Thanks for joining us. If you would like to ask any questions or comments, our details will be on screen during the show. In this show, we're going to be carrying on with our series on tax, our special October series. This is the last one in which we talk about tax compliance. And in the second half of the show, we will be having a look at the medium-term budget speech by Finance Minister Neni. But joining me in studio are Hassan Motala, Senior Investment Analyst at Oasis, as well as from the Oasis Crescent Advisory Services, Ebrahim Rawoot, a Senior Wealth Manager. Gentlemen, Assalamu alaikum.
Wa alaikum salam wa rahmatullah.
Ebrahim, the first question to you. Tax compliance normally consists of two categories, if I'm not mistaken. One is our tax returns, and the second one is VAT. How do we understand our role as a citizen, for example, in terms of tax?
Well, Shafiq, every person that is subject to income tax has to submit a tax return. Now, your tax return starts on the 1st of March and it carries through until the end of February the following year. Now, SARS normally makes this announcement as to when you need to start submitting your tax returns, and we refer to this as your filing season. Now, you would have seen a lot of adverts being played, whether it's on television, whether it's in the newspapers. In fact, the SARS website has been, encouraging people to say the filing season is open. You need to now start submitting your tax returns. Now, naturally, you cannot submit your tax return within the year that you're actually submitting that information. So SARS says to you, the information that you're submitting would relate to the previous tax year. So as an example, the February 2015 tax year, that would relate to information of income that you've earned from March 2014 until the 28th of Feb. And that filing season started the 1st of July.
Hassan, the filing of tax returns, this is quite a big one, and we see that looming large word deadlines, and a person almost feels dead when one sees that word. Tell us something more about when are the deadlines for the specific kinds of tax that we have to give returns for?
Sure. Remember, always in life and in many things that we do, there's always deadlines that we have to adhere to, and tax is no different as well. I think very importantly though, there's a couple of key deadlines. Firstly, taking into account that you've got one that has already passed, unfortunately. So those that obviously normally do their tax returns by still, filling out the forms, filling the physical forms and submitting it physically, that deadline has passed because that was 30 September, so that's already gone. However, for individuals in terms of filing online, now remember we are living in an age these days of everything's being done online. Either through our smartphones, our tablets, our laptops, we're working online. It's becoming a lot more digitized, technologically advanced economy. Similarly, when filing returns, it's a lot more easier and efficient to do it that way. You go online onto a SARS website, you register yourself, and you do it online. It's a lot more efficient. You're doing it from your home, within your space, or wherever, and do it a lot easier. Now, there the deadline is 27 November. Please adhere to the deadline. Because importantly is, if you don't adhere to the deadline, there's always issues such as penalties and other related fees that could be,
and the penalties can be quite harsh, I believe.
The penalties could be quite harsh. So why put yourself at that risk of having to pay additional money? You are paying your tax. You want to make sure that you don't want to incur the additional penalties. File it by the 27th of November as an individual. However, there's also two other deadlines just to highlight. So those, for example, that are provisional taxpayers. So your entrepreneurs, many professionals, be it doctors and the like, that have their own practices and the like, tend to be provisional taxpayers. In their case, they should file it by the 29th of January 2016. So they've still got a bit more time. But the individuals, remember, I highlighted 27 November, that's around the corner. Don't leave it to the last minute to get online and try. You've got the next few weeks, try and get it done as soon as possible. And then just one last point just to highlight, there are many clients out there that are obviously, have businesses, small and medium enterprises and the like. They have to file their returns 12 months after their financial year end. So their financial year ends obviously can vary, be it the end of 28th of Feb, but many of them may have end of March, end of June, whatever it is. They obviously have to ensure that within 12 months after the year end, they have to obviously file their returns.
Ebrahim, when one hears the word tax returns and the word filing, I got this image of piles and piles of paper and box files, and one just gets avalanched by all of this paperwork. What's the reality? I mean, how exactly does one go about it in terms of filing?
Well, I think, the first thing we need to understand is that there is the return itself. Now, that return we refer to as your ITR 12, and this is specifically for your individuals. And Hassan mentioned, the deadline being November. Now, for those individuals that make use of e-filing, you remember your employer would have submitted an RP5 certificate, and that information would then have been pre-populated onto your e-filing system. So while e-filing and the electronic interface is so much easier, that information has already been transferred onto the system. So you're already one step in the right direction. But now remember, as individuals, we're also earning other forms of income. We're also making contributions, whether it is to a private medical aid, whether it is to a private retirement annuity. You might be earning locum income. There's so much other forms. But for every one of that, there would be a certificate that would now be issued. So now you as an individual need to take that information and you need to include it into the e-filing system. But we must be careful, Shafiq, because while the RP5 information has been pre-populated, it's easy. But now you need to take this other information and you need to manually insert it into your tax return. And this can be a problem, especially if you don't know where the information needs to go. SARS is smart. They need to make sure that the information you're declaring is in the right, is in the right category. So what is very important is we as individuals, we mustn't be shy to ask whether it is a tax practitioner, whether it's a tax expert. SARS even welcomes you to come and visit their offices. They've had these little demos at various centers. They said, come and sit with us. We'll make sure that you're compliant and all those things. Now, SARS needs to make sure that this documentation that you're now including is also retained. Because when there is an audit, SARS needs to make sure that you are supporting that with relevant information. So we've now changed. We're not having to tell you go the old route of submitting thousands and thousands of papers and everything is fine. SARS will only request this information from you if there is a need to do so. So some of the more common documents would be, your RP5 certificate, your IT3B, IT3C certificates, and this is from investment income. There's your certificate regarding your medical aid contributions, and this will be issued by the medical aid company. There's your certificate regarding your contributions to your retirement annuity. There's your income that you would have earned in other sources, whether it was locum, whether it was rental income, business income, and then most importantly is the invoices relating to the deductions that you want to substantiate this reduction in your taxable income.
Sure. Just to add to that, obviously from a records perspective, it is very important to maintain your records. So all documents that relating to submissions, very important, the requirement is that you need to keep it for at least 5 years. So very importantly, make sure that whatever you're filing now or whatever you have filed previously, keep your records for at least 5 years. SARS can issue a revised assessment within 3 years after the return has been submitted. So if there are any issues, with the assessment, or they need any particular documentation relating to previous assessments, at least that if you've got it safe and you're keeping your records safe, you can obviously address those queries and submit this documentation. Just one last thing again on the compliance side is that when you're filing a return, and if obviously there's and now you've been assessed, if there's an amount that's outstanding, please make sure that you pay the amount outstanding within the stipulated date, even if you're objecting to that. There may be, the SARS will give you an assessment. It says, okay, so and so, you owe now still 50,000 rands based on their assessment. But according to your calculations and you deem that, what, I know nothing. Unfortunately, though, as per the law and its requirement, is that you pay now, you object later. So you have to pay by the stipulated date, but you obviously have recourse in terms of objecting, and you have the ability to reclaim that at a later date. But please, whatever is the assessment comes, if you have to pay within the required date, pay with the required date. Again, if you don't pay within the required date, there's again potential for penalties and the like. Avoid that, pay it, But make sure then after that that you follow the route and object. If there's a need to object, then you can obviously follow the route and try and reclaim what you need to reclaim.
Right. And now, Ebrahim, before we go on to VAT, there's something that's called provisional tax. What exactly is this?
Well, I think, it's important to note that provisional tax, it's not a separate tax, but it's more a early payment of income tax. So as Hassan mentioned, a provisional taxpayer would be someone that's earning other sources of income, whether it is rental, locum. So that's normally your self-employed individuals. The income is quite erratic. So, every month it's different. They need to submit a tax return at the end of the year for the total annual income they've earned. But what a provisional taxpayer now has to do, he has to comply at two sections. The one is the 31st of August, when he makes his first provisional payment, and then the second one being the end of the tax year end, which is the 28th of Feb. But this is where the important point comes in, and that is, as an individual now which registered as a provisional taxpayer, he or she now needs to make a part payment in August and a second payment in February. Now remember, we might not get the exact amount right in terms of how much taxes we need to pay. Maybe your tax practitioner, your accountant is still, trying to, on the last minute, decide what income now needs to be disclosed. So SARS gives you that opportunity of a third payment, which will be done in March after the tax year end. So it's important that as a provisional taxpayer, there are two areas that we need to comply with. And then as Hassan mentioned, if there is an amount that's due, make sure you pay it. It's unnecessary penalties. We are already paying taxes. We do not need to be paying more in the form of penalties.
You are watching the Oasis Focus on Finance show. We're talking about tax compliance. When we come back from the break, we will finish up with the issue of VAT, and then we'll take a look at the medium-term budget that was delivered in Parliament this week by Finance Minister Neni. Don't go away. Stay with us.